David, all the news flow at the moment is about the attempted Trump assassination, and markets are reacting. Many are saying that that has boosted Trump's chances of actually winning the presidential election in November. What are your views?
It's very interesting. I wish I had a clear view of what was going to happen. Initially, when it did occur and the news came through, my first thoughts that markets would come under a lot of pressure, because those kind of events normally cause worries and concerns because of the uncertainty. And you would, the initial recommendations were buy gold, go into treasuries, buy the dollar, sell off equities, and the opposite has happened. I mean, equities are very strong on the strength that this, as you mentioned, that Trump's going to be a shoo-in for this election. And of course, he's pro-business, reducing taxes, introducing tariffs and so on. So, looking at the markets now, things are a lot better around that. I'm concerned. When I say concerned, I don't know where this is going to lead, Bronwyn. I'm not clear. I have children in the United States. When I talk to them, it's not that certain. They're concerned about what Trump is and what he stands for. And I think a lot of people are saying we've had enough. We want to go the middle road. We want the good old Norman Rockwell America again. Pumpkin pie and Sunday baseball game type things. So there are a lot of issues we're going to have to navigate. In the next couple of weeks, or really leading up to the election.
Have you paid any attention, David, to what many are calling the Trump trade, i.e. energy companies, as you say, pro-business, energy companies, credit card companies, health insurance companies, private prisons? Those are the themes that unfold in this so-called Trump trade. Have you got any thoughts on whether we should be positioning?
Well, the positioning, and I think it doesn't only include the Trump trade, is on this whole energy situation, because there has been reluctance to push the EV, electric vehicle side of the market. And there's a view that this is going to take time. And, he is one who would favor going back to oil exploration and using local oil and pushing the internal combustion engines. I think we're going to get halfway, and which is going to be a hybrid type situation where you still got internal combustion as well as battery. So, but those are the kind of issues that will change with Trump. He doesn't take prisoners, and I don't think he's when it comes to ESG, I think it's going to be a lot more difficult for him to actually get out of it. I think the world's going that way. So a lot of and Bronwyn, I think this is where I'm getting to. People not quite sure what they want of America. Is this the America they want, or do they want, they don't want the liberal America? They don't want the far left. I think they're looking for the center, And Trump's got a very solid base of support, but, so have the left or the Democrats. And I think it's those middle voters that I think are going to decide. And we don't know where they are at the moment. I'm not sure that they're going to push to Trump. I really am not sure.
Another thing that we can't ignore, of course, is a softer inflation out of the US on Friday, and everybody jumping on the bandwagon in terms of a potential rate cut out of the Fed in September. We also have the South African Reserve Bank meeting later this week. Any chance of some relief, do you think, on the local front?
Oh, yeah. Oh, definitely. It's going to happen. And I think probably not this week. Maybe not. There's a chance. There's a chance. We started to raise rates long before the rest of the world. I think we need it. We need to give this economy a little bit of a kick, in line with the Government of National Unity, who are really also going to be trying hard to get growth back here. So inflation's still relatively high. We're still above, we're in that 4.5, 5 rate, which is high, but it's going to come. And I think there's almost now 70-90% chance that the US will cut rates. And I think the commentary coming out of Trump, you can see, is a lot more dovish. And, he's not only governed by inflation, he's governed by growth as well, or employment. So very important, and he's very sensitive about that market, which is slowing down. So I'm ultra bullish that we're going to get 2 rate cuts. And once they start, they don't stop. So I think we're going to get, globally, I think the next year is going to be underpinned or characterized by rates coming down, which is great for equity markets.
It's great for equity markets. So what should we be looking to ensure that we take advantage of an interest rate cutting cycle?
That's what do we do? Do we go for tech? Tech is still dominant. It's still very, very dominant in the global market in the US. AI is a theme that's not going to suddenly fade away. It's not a fad. There's real money going into it. There's real growth. These companies are making, the tech companies are flush with cash. They're still spending. So you can't ignore that. There is instinctively, you want to sell those and go for interest rate sensitive stocks. I think there's going to be some of that happening. I haven't made up my mind, where to go.
You're going to hold on.
Yeah, I'm holding on to tech, but I'm also starting to look at some of those businesses like, Walmart and Costco, which was going to pick up more spending. Some of the beauty companies like L'Oreal, Home Depot, businesses like that, where you expect the housing market to come back into not into a bit of growth. People will start spending more, maybe spending more on their homes. So yes, you can't ignore it. So definitely it will play out. But I haven't got a clear cut strategy at the moment. I'm sticking to my favorites, which have been and luxury as well. I think it's also going to bring some relief, on the luxury side. China's still the missing link in that. It's disappointing, but so I think it's going to be a good market. But how to play it, I haven't really got it that clear.
You're not going to give me, when you say how to play it, I'm looking for some insight into that timing. Am I clear when I hear you say that you're not sure yet when you are actually going to start buying the consumers?
I'm buying now, but I'm not quite sure which stocks to buy. You know what I mean? The stocks I mentioned are certainly on my buy list. I've always liked the businesses. They've been well run. What I'm trying to say is I'm not abandoning tech. That's the point I make. I'm staying with the tech choices, and I'm staying with the AI theme. I'm staying with the obesity, with the Novo Nordisk, Eli Lilly's, with that theme, which is the weight loss drugs. But I'm trying to find, okay, which are the best companies if interest rates do come down? Have I got them? Are those them, or are there others? That's my uncertainty.
Well, I was chatting to Alec earlier, in fact, 2 weeks ago. He was saying ASML, they thank you for ASML and putting that into the portfolio. Is there more opportunity there?
Oh, yeah. I know. That's not this year. This year, they've already signaled that things will be flat, but it's from next year that the growth is going to take off. They build these enormous machines, which without them, you can't have AI, and the same as Nvidia. Without Nvidia chips, you can't have AI. So I think the 2 stocks that I really love and continue to buy, and they well-run businesses, are ASML. It's like a monopoly. And I'm still a big Nvidia freak. I still think that the story's not over. The more I read about it, the more I like it. And the more that it goes up, the more cynics that do come into the market and tell you to get out. I'm saying, not yet. There will be a time where it explodes and it gets too much. But in the meantime, you could still hang around there.
You mentioned luxury goods, and we chatted a while back on Richemont potentially being in play with LVMH. Now, I had a chat to Jean-Pierre Verster, who said perhaps Kering is a better match for Richemont. Any thoughts on this corporate activity that could galvanize Richemont?
That's, it's interesting he says Kering, because Kering's been a big underperformer. But you know what, Bronwyn, what you're finding in the luxury area, it's the people who manage the business, and it's also what they make, the bags that they make, the shoes, that's luxury. And Kering just haven't made it. They've got their strategy wrong. They just haven't captured the imagination of the consumers. It can turn around straight away. You need just one good designer, as we saw in the past with Tom Ford, who turned this company, who turned Gucci around once before. So, watch it carefully. For LVMH are going on a very strange strategy, which I'm becoming a little worried about, that they're cannibalizing their brands, as we saw with Pierre Cardin many, many years ago, although that was his strategy, to bring luxury just to the common person. But what's interesting is that Richemont is making its way back. And it's not making its way only in luxury watches. It's on the jewelry side, in Cartier and Van Cleef & Arpels, that they're just killing it, and doing very, very well and making big ground. Who's going to take them? I don't know. Which is the better match? I'm not really sure. But I think we need some guidance from Kering. Kering's got to get its own business well. It's got to get its brands right. It's an incredibly interesting area of the market. I think the ones that stand out are Hermes or however you want to pronounce it. And I love Ferrari. And the reason that, and I always say this, not even jokingly, where in Hermes, where your Birkin bag, the second-hand bag, costs more than the new bag, you got to know there's demand out there. The same thing with Ferrari, where their old cars are selling more than the new cars. You got to say, I like this brand. This is something else. So
it's a good investment.
It's very specific, a very interesting area of the market to understand and analyze. But I love that area. I love to watch and understand those companies.
You spoke about consumer stocks on the international stage, but you haven't spoken about consumer stocks locally. Is there anything that you think you could pick up in light of a interest rate cutting cycle coming to fruition?
I suppose we used to have well-run retailers. I'm not so sure anymore after what we saw with Pick and Pay, when we've seen Massmart, we've seen Spar, all those companies come down. But the one I like is Foschini. I like Foschini very much. I still like ShopRite. I'm still a big fan of ShopRite and the strategy that they pursued. Woolies, so. I was a little disappointed in their recent results. They've been hurt in Australia again. So for choice, I would choose those two. I would stick on the grocer side with ShopRite and on the consumer side, apparel side with Foschini.
David, we haven't chatted about resources. Obviously, as you said, the Trump attempted assassination, we thought there would be a huge flight to safety. That may still occur as the week unfolds. But from a resource perspective, I mean, we've had so many conversations over the years on the resource play, specifically in South Africa. You know what?
I'm going to be a chicken. When I say a chicken, the way that I'll describe it, there's more upside than downside. Okay. In other words, you've got more chance of making money in resources at the moment than of losing money. But when this turnaround's going to come, I think we've been waiting and waiting. It will come. And I think it'll come once we start to see interest rates globally coming down. It's going to mean that we're going to push growth up. China's recent growth numbers have been disappointing, but it does suggest
the same level.
Well, what it does suggest is that they're going to start stimulating, or they're going to have to start stimulating. So we need growth out of China, and China still remains a very important market in resources. I read quite a few reports on platinum now, and I'll come back to the story that we mentioned earlier with this hybrid with the hybrid vehicle, which I think is going to be more popular than the EVs, you're going to need, what's petrol as well, or oil, which is platinum. You're going to need those converters. So, it's early days. I don't want to pull the trigger yet, but it's going to happen soon. I'm watching very, very carefully. I watch the charts carefully. I see if there are more sellers than buyers, and I'm waiting for that turnaround to come, but it will come.
And your entry points, so what would it be? Specifically, if you're looking at platinum, I've got to think Sibanye.
From platinum point of view, Sibanye and Impala are going to be the highly geared ones. Amplat's probably the safest one, but I'm still, if you force me to buy a resource, I'll probably say, I'm going to go Billiton. I got to go BHP. I like, it's a well-run business, been under a bit of pressure, still struggling on the nickel side and that, but maybe that's the way Glencore I'd go. But if you want to be adventurous, you're going to make money out of platinum whenever it gets to these levels. When, I can't call the exact point, but that's why I say I think there's more upside. Even if you bought them now and wait, I think you're going to see more upside than downside.
Well, I definitely don't want to feel as though I'm forcing you into buying Billiton.
It's a good business. It's a bit lukewarm at the moment, going nowhere. But that's okay. We tend to become too impatient in investment. We want everything now. We want Nvidia. I want another. No, it's never like that. And Bronwyn, I always remind people, if you go into the 10-year Treasury bond in the United States, you're getting 4.2% per annum. Okay, I'll say that again. That's your annual return. So you can't get 4% a day. It's 4% per annum. So if you go into equity markets, be happy with a little bit of a premium, 6% per annum, or somewhere around there. I'm talking in dollar terms, and that you can convert it to rands. So I think we've got to learn to be a little patient. We've lost that, we too kind of, we're too, what's the word, manipulated, influenced by what we've been seeing in the tech and some of the other shares as well. We've got to get back to kind of almost a normal way of looking at investment.
I think we spoke 4 weeks ago. You were talking about bond yields, you were talking about property yields, and you were saying, watch this space. Any further clarity?
Watch the space. Once rates start coming down, you get suddenly those property stocks will become attractive. They've gone through 5 years of really difficult times, but they will turn. And some of the yields that you're getting there are very appealing. I still think that you've seen, I read on Bloomberg's, I read on Thursday, was one of the biggest days in the bond market, inflows from foreigners since 22, so I think January 22 or somewhere around there. In other words, massive amounts coming in. We saw our yields come down. So I still think there is attraction in our long bonds, the kind of yields now. And again, I say, as rates come down, you're going to make that capital profit. You can lock in a yield for as long as you like, 10, 15, 20 yield and years, and you will make some capital profit. Those things are going to improve. So I've got no doubt that, that's why I'm saying we're in for a good year so far, even longer than that, of markets, bond markets, equity markets, property markets, and so on.
And as you said last time, you're an equity man. For you to be talking about the bond market and the property yields, etc., that is quite something I think we should take note of. The biggest holding in your portfolio, what is that as we close out?
Not Nvidia, not Papa. It's something that has just staggered me, and the conundrum, Bronwyn, what do we do now? Do we take profits or do we go for the ride? My view is go for the ride still, because the story is still strong. And if we sell, what are we going to do with the money? Go into similar type stocks. Go into TSM, Taiwan Semiconductors, or you're going to go into Microsoft, or you're going to go into Alphabet. You're going into similar type companies. So if Nvidia falls, they all going to fall as well. So unless you want to go into the stocks that I was mentioning, some of the interest rate sensitive stocks, I just think go for the ride. Let's wait for the next set of results. We'll review it then. But I still think that story is not complete. It's not finished.
So hold Nvidia. We're going to leave it there, David, until we catch up again. Thank you very much for your time. David Shapiro, Sasfin Securities.